I'll say it again. You know how bullish I've been, and I've said it now in recent weeks when I get interviewed. Gold's going to have a three handle with it without ever having a below two handle in it. And with us at 2,600, 3,000, it's not that far away. It's not that impossible. So I still retain a very, very bullish stance.
You're watching Silver News Daily. Subscribe for more.
Did you know that the U.S. economy could be on the brink of a recession and that your wealth might be at serious risk? While everyone else is focused on the stock market, the real story lies in safe haven assets like gold and silver. Why? Because the Federal Reserve just made a historic move, cutting rates by 50 basis points for the first time in over 4 years. This isn't just a minor adjustment. It's a warning sign that inflation might be spiraling out of control and that the economy could be in much deeper trouble than most people realize. Now, I get it. Predicting a recession isn't exactly a groundbreaking take, but here's where it gets interesting. Despite official numbers saying everything is fine, some experts believe we're already in a recession, and the only way to protect your wealth is through assets that have stood the test of time. So before you make your next investment move, stick around because I'm going to show you exactly why gold and silver could be the safest bets in these uncertain times. And you won't believe the facts behind this.
So how do you like this scenario, Elijah? So we had Bidenomics when it was happening, and part of the push behind Bidenomics was an argument that look how strong employment is. Look how it's doing. Forget about it. It's just a lot of it was recovery from COVID. But look at these employment numbers and look how much we're having. And employment number come out. Everybody say, proves to show you Bidenomics is working. And then they kind of changed it the next month. And this went on and on. And what happened? We got a number out that showed that almost a million, and it will be above a million when they finally adjust it for the final time. There were a million more jobs reported than really was the case. Then I asked people this, okay, if that's the case, and Bidenomics was not as strong, and Harris is part of Bidenomics, the Federal Reserve was making decisions based on that. Throughout the time of their tightening, they said there were two main reasons for their tightening: inflation and strong employment. Well, it turns out that one of those two factors was way overblown. It wasn't anywhere as strong. So now if that's the case, first you have to say, well, the Federal Reserve really was duped in a sense if they were taking it on face value. And now people, instead of going, wait a minute, we should be even more concerned. Now the stock market's rallying because guess what? This now allows them to give us a 50-point base cut. And that's bullish for stocks. The cup always half full, the spin, even though the underlying factors are getting worse and worse, is how people get trapped in a bubble, how bubbles cause false premises and they build on one another. Real quick example, if you don't mind, there's a real hot technology stock out there that's been involved in artificial intelligence. It's gone up X amount of percent. And the other day, the market was down 700 points right after the debate because people were concerned, oh my God, Harris could win. This could be bad for the economy. And then this guy came out at a conference and said, hey, listen, our customers are just going crazy because we don't even know if we're going to be able to give them everything they need. And the stock market turned on that. Meanwhile, the guy is selling hundreds and hundreds of millions of dollars of his stock. If your customers are doing so good, why would you want to get rid of a stock today that's going to be worth so much more tomorrow based on the implications you're saying of how business is doing? These are one of many, many signs of a bubble. And part of the other sign of the bubble is how well gold's doing, because you would argue if the stock market and the economy is doing it half as good as the don't worry, be happy crowd says it is, gold should not be performing. I believe gold is being used again in part by people who realize what I just said is true. It's a bubble and it's going to lead to big trouble down the road. So the perfect storm for gold, I've been at this 40 years. This is the perfect storm for the gold market. And there's nothing on the horizon to suggest that there's going to be a break.
As we dig deeper into the state of the U.S. economy, it's becoming clear that we're standing on shaky ground. Just recently, the Bureau of Labor Statistics revealed a stunning revision. 818,000 fewer jobs were created over the past year than we were originally told. That's not just a small error, it's a glaring sign that the economy is not as strong as it seems. Imagine that. Nearly 1 million jobs vanished from the official count, and yet we're being told everything is fine. But is it really? Let's add to this the slowing growth rates. In the first quarter of this year, the economy managed to grow only 1.3%, a far cry from the booming recovery we were promised. And then there's the Federal Reserve, scrambling to cut interest rates by a hefty 50 basis points, a move they haven't made in over 4 years. This kind of aggressive rate cut isn't just a routine adjustment. It's the Fed signaling that something is seriously wrong. But what's really alarming is the message behind these moves. They're trying to keep the economy afloat, but the cracks are showing. You see, these rate cuts are supposed to encourage spending and investment, but they also highlight the Fed's lack of confidence in the economy's strength. It's like a lifeguard throwing out a life preserver in calm waters. Why would they do that unless there's a storm coming? The truth is, while we're not officially in recession, yet many of the indicators are pointing in that direction. And if this trend continues, the economic downturn could get harder and faster than anyone expects. So, what does all this mean for you? With the Fed lowering rates and economic growth slowing down, traditional investments could be in for a rough ride. It's time to start thinking about how to protect your wealth before it's too late. But don't worry. We'll get into the best strategies, like investing in safe haven assets, in just a moment. For now, the big question is, how prepared are you for what's coming next?
Let me get a shake and get that out of me. And then let me just say this to you. If you and I had a conversation 20 years ago, maybe 15, but at least 15 to 20 or more, and we were just talking, and I said, hey, did you hear about this country? The guy who never had been political ran, shocked everybody, won. The 4 years he was in, they tried to impeach him twice. They blamed everything, collusion, all this other stuff on him. He lost a close election. Some people say it wasn't fair, etc. Just before that, there was a kind of a riot thing, and people made it like he was trying to overthrow the government. After he was out, they tried to charge him and did on several fronts. They even found him guilty on something. And if he didn't turn his head one day, he was probably going to be killed by an assassin's bullet that ended up just grazing him. Oh, and by the way, the guy that did beat him in that close election that people questioned, since the time he got elected, there was a lot of concerns and a lot of circumstantial evidence that he was crooked, his family was crooked, he was getting quite ill. But even a year before he would try to run again, they were already telling him that his second in command they should really replace because she's absolutely no good, useless, what have you. And then he gets the nomination only to be pushed out. And the girl that they just said a year ago was no good, they have her running now. And now some people are saying she's going to win. And you know what your response would have been to me? Pete, what third world banana republic are you speaking about? That's the God's honest truth. That's the United States right now. That's exactly what has transpired. So anybody that just sits there and goes, yeah, this is a simple breeze, it's going to, it's just going to go this way without any concern and all, is just asking for trouble.
Let's talk about the Federal Reserve for a moment. In the past 2 years, they've swung from aggressively hiking interest rates to now suddenly slashing them by half a percentage point. That's a dramatic shift, and it's got everyone wondering, what's really going on here? Historically, rate cuts like these are a sign of trouble. They're meant to stimulate a struggling economy by making borrowing cheaper, but they also have a darker side. They can signal that the Fed is trying to stave off something much worse. You see, when the Fed cuts rates, it reduces the opportunity cost of holding non-yielding assets like gold and silver. That's why we've seen silver prices skyrocket past $31 recently, breaking key resistance levels that have held for months. The technical analysis is showing strong bullish momentum, and some experts believe this could be just the beginning. But why is this happening now? The truth is, the Fed's rate cuts aren't just a response to the current state of the economy. They're an attempt to prepare for what's coming. The markets have been turbulent, and investor confidence is shaky. Remember, it's not just the U.S. that's struggling. Global markets are interconnected, A slowdown here could ripple across the world. Lower rates are supposed to boost spending and investment, but they also make the dollar weaker and could lead to higher inflation down the line. And here's the kicker: the Fed is expected to cut rates even further by the end of the year. That means even lower returns on your savings and potentially an even weaker dollar. So where does that leave us? In times like these, smart investors start looking for assets that can withstand economic turbulence, like gold and silver. These metals have been trusted for centuries as a hedge against uncertainty and inflation, and right now they're looking more attractive than ever. Are you considering adding them to your portfolio, or are you still relying on traditional investments that might not hold up if things take a turn for the worse? We'll dive deeper into why these metals are shining right now and how you can use them to safeguard your wealth as the economy continues to wobble.
People would have to know these movies, but there was a famous movie called The Sting with Robert Redford and Paul Newman. There was Weekend at Bernie's, and then there was the movie Truman, if people remember that. And if you take the characters and characteristics and the themes of those movies, that's exactly what we have. There's somebody behind the curtain. We propped up somebody that was at least walking dead and fooled a lot of people. And then it's the ultimate sting that it's one con, and in all of this, people have become numb to it. Yeah, there's some people speaking up and speaking out, but the average people are just going about it and all. And it takes me to another level. I know on your show I can say it. One of the other things that's happened in a generation and all, for those who believe in the Christian walk, the devil has disappeared out of the equation. Nobody talks about it. It's very rare that religious leaders speak about it. This is a perfect scenario for the devil at this point in time. So I know people don't, but I do. You know, I take my faith seriously. And it's just it. So nothing would surprise me between now and election day. And quite frankly, I'd make this point. I think this is very important, Elijah. Even if Trump manages to win, and even if he manages to get sworn in, do you think these people who have done what they've done to him since the time he walked down that escalator in 2016 to now, do you think they're just going to stop and say, okay, we lost? No, I think they'll get worse than they've ever been. And that's why anything past a short honeymoon, even if Trump wins, I think we're going to have even more challenges than we've had up until now.
Now let's take a trip back in time. Whenever economic recessions hit, certain patterns emerge, and one of the most consistent is the rise of gold and silver as safe haven assets. Historically, during every major financial crisis, from the 2008 meltdown to the dot-com bubble of the early 2000s, these precious metals surged as investors scrambled for stability. Why? Because when the markets are chaotic and the value of the dollar weakens, people turn to what has held value for thousands of years. In fact, gold and silver aren't just safe bets. It outperformed many other investments during times of economic uncertainty. Let's look at 2008 when silver prices soared as the stock market tumbled. And here we are again in 2024, seeing similar patterns. Silver recently broke past $31 per ounce, a key psychological and technical resistance point. That's not just a coincidence, it's a signal. Investors are moving away from riskier assets and looking for security. But here's what makes gold and silver particularly attractive today. They're not just defensive assets, they can also be growth opportunities. During past recessions, not only did they protect wealth, but in many cases they dramatically increased in value as demand surged and supply tightened. Right now, silver's 14-day relative strength index, RSI, is about 60, signaling strong momentum that could drive prices even higher. Some analysts are eyeing silver's previous high of $32.50, and if it breaks through that, who knows how far it could go. But let's not forget gold. It's not just about hedging against inflation or a weak dollar. It's about positioning yourself for growth when other markets falter. With inflation still hovering above the Fed's 2% target, and the dollar weakening from recent rate cuts, gold could be set for a major rally. The question is, are you ready to take advantage of these opportunities, or will you wait until it's too late?
Yeah, I think it is. I think it's all part of a master plan. One thing I like to mention before I forget, Elijah, people have been asking me now, well, gold's moved too far, and maybe I'll wait till it pulls back. It is a kind of high number. Why should I risk that? And I remind them that when I started in the business, there was a guy out of Gainesville, Georgia, named Robert Prechter who predicted 3,700 on the Dow when the Dow was around 1,200. And everybody said, what are you, crazy? The Dow's never been over this level. It's always traded between 700 and 1,100 or whatever the exact number was. And that's just seemed insane. And now when you think about it, 3,700, where it is compared to now. So I bring that up to people to recognize that when there's dramatic changes, that you can get prices much, much higher than you could imagine. And so I wouldn't let the fact that it's just at an all-time high be a reason to stop. I think the far more important question is, why is it doing what it's doing? And who's doing it? And it's clearly an effort. And the other thing that understand is this. Let's not forget other geopolitical factors. Let's not just focus on the BRICS. Listen, we have Russia telling basically NATO that if you guys end up using these missiles to give to Ukraine to hit us in, to Moscow and all, we're not against using nuclear weapons. That's a pretty scary thing. We have in the Middle East now, Israel's fighting on 2 or maybe 3 different fronts. There's all sorts of attacks in the sea where ships are being attacked. And we still have China and Taiwan and a few other places. So I think geopolitics is another reason that people outside of North America who have been more concerned about safety and all, and naturally having a kinship to gold is another bullish factor for the gold market.
Let's shift our focus to the current state of the precious metals market. Silver has been grabbing headlines lately, rallying past $31 per ounce, and it's not just because of a sudden spike in demand. The recent surge is driven by a perfect storm of factors: a weakening dollar, lower interest rates, and the growing fear of economic instability. For those who have been watching the markets closely, this rally isn't surprising. It's been building for months. But what's really fascinating is the technical analysis behind this move. Silver recently broke out of a downward sloping trend line that's been in place since May, and it's now eyeing its previous high of $32.50. The 20-day exponential moving average is trending upward near $29.50, signaling a strong bullish sentiment. Meanwhile, the 14-day relative strength index is above 60, indicating a fresh round of buying momentum. These are all signs that silver could continue its upward trajectory, potentially reaching new highs. So why does this matter to you? In times of economic uncertainty, silver and gold often become the go-to assets for those looking to preserve their wealth. But silver in particular offers a unique advantage. It's not just a safe haven asset, it's also a highly versatile metal with industrial applications. That means its demand isn't just tied to investor sentiment. It's also linked to sectors like technology, electronics, and even renewable energy. This dual demand could propel silver even higher if economic conditions worsen. But here's a critical question. Are you paying attention to these signals? Or are you caught up in the daily noise of traditional investments? Many people wait until it's too late to make a move, thinking they have more time. But as history has shown, when the market shifts, it can happen quickly and decisively. So are you prepared to seize this opportunity before the window closes? Stick around because we're going to dive even deeper into how you can take advantage of these trends and protect your financial future.
Really a continuation, a little bit different. I'll mention in a moment about silver, but gold is really just continuing a mega bull market that still to this day, most Americans have not participated in it in any way, shape, or form. It is just huge accumulation continues on the world stage by central banks, by very large investors. As we get to this BRIC meeting, as you know, I've felt that a good reason for the gold's performance over these last few years has been the expectation, and we're probably going to learn a lot more than we learned last year on how far along they are on how they're going to commence their trading and what kind of monetary system or systems they're going to use. We've gotten some indications already where they've spoken about a unit that's going to include about 40% in gold, which is very, very unique. And I always ask this to my don't worry, be happy crowd friends that still work on Wall Street, who, as you know, I believe you can toss them off the Empire State Building and all the way down, they'd all say the same thing. Hey, so far, so good. I ask them, what's causing gold's rise? It's not a speculation. It's not some type of stock and all. What has led to this, and why is it that central banks are such aggressive buyers? And the discussion that doesn't take place a lot, Elijah, I know in your world it does, but in the regular world it doesn't at all. Why did so many countries repatriate so much gold from the United States back to their central banks? Obviously, I think I know what the answer is, because they're preparing for the changes that are coming on the world stage in returns to monetary, but they've also have come to conclude that gold is even a better holding than U.S. securities, that it has now actually outperformed the performance of bonds over the last 50 years. And one last thing, Elijah, I know it's a run-on sentence for me here, but people can't forget this. It was a key because gold kind of turned around the same time when the Bank of International Settlements, which is really the central bank's clearing bank, it's the central bank's banker, as some like to call it, when they raised gold to a tier one investment along with stocks, that was an indication back then that the central banks were going to be more involved with the gold, and it continues. So, I'll say it again. You know how bullish I've been, and I've said it now in recent weeks when I get interviewed. Gold's going to have a 3 handle with it without ever having a below 2 handle in it. And with us at 2,600, 3,000, it's not that far away. It's not that impossible. So I still retain a very, very bullish stance overall towards it.
Let's talk about what could be on the horizon for the U.S. economy and why the Federal Reserve's actions are raising eyebrows. After the recent 50 basis point rate cut, analysts are speculating that the Fed might not be done yet. In fact, many believe we could see another 75 basis points cut before the end of the year. If this happens, it could send shockwaves through the financial system, leading to even lower yields on traditional investments and a potential spike in inflation. Imagine the impact on your savings and investments if the value of the dollar continues to erode. But here's the thing. While lower interest rates are intended to stimulate the economy, they also come with significant risks. If rates drop too low, the cost of borrowing becomes almost negligible, encouraging reckless spending and borrowing. We saw this play out during the lead-up to the 2008 financial crisis, and it's a scenario that could easily repeat itself. The Fed's balancing act between stimulating growth and controlling inflation is becoming more precarious by the day, and this is where gold and silver come into play. As the dollar weakens and inflation potentially creeps back up, these precious metals could see a surge in demand. Gold, in particular, has historically been a hedge against both currency devaluation and inflation. But silver might be the real sleeper hit here. Its lower price point makes it accessible to a broader range of investors, and its industrial demand adds another layer of value. So what's the takeaway here? If the Fed continues on this path of rate cuts, traditional investments could suffer, but gold and silver could shine brighter than ever. Are you ready to adjust your investment strategy accordingly? Or will you wait until the damage is done and it's too late to protect your wealth? Let us know in the comments if you think the Fed's actions are setting us up for another financial crisis. And stay tuned as we explore how to strategically position yourself in these uncertain times.
The only financial book worth its weight in gold is the Holy Bible. It's the manuscript to life in my house. For me, it's light years ahead of even my own book itself. And in it, there's a lot of great teachings. And one of the teachings is you can be in the world, but not of the world. So that's one of the first things you have to change. It's a lot harder to do that now than it might have been years ago. The other second teachings is that there's more topics about matters of money and finance than there is about what you think the ultimate target of the book would be, heaven or hell. So someone who wrote that book, in our view, it's been written by God, it's been inspired by God. But even for people that are secular and say it's just an historic book and it was just a bunch of people got together, man, they've been more accurate about things than anybody else has been. It goes back to the first part of the book about moral compass. What has been lost in the world and here in the United States is a moral compass. Your parents, and especially your parents, didn't matter whether they were Jewish or Catholic or even other type of religions. They all shared a moral compass, basically a Ten Commandments type lifestyle. And they lived within that. It was in our law, it was in our schools, it was in everywhere. It's basically been taken out. And because of it, there's no guidance, there's nothing to keep the ship steering. It's a rudderless ship now, day-to-day life. And some of the people who got in charge of it should never be on a boat to begin with. And so therefore, we have to keep that in mind. And it's especially challenging because we know that there are events and potential things that some people are not focusing on. The world has become more agnostic, if not atheist. It's not moving, certainly in America, towards more of what our faith believes in. Yeah, there may be more of a dynamic within that group that is, but there's a lot more people that are going, it's not that important to me at all. And we have to remember that. We have to remember that everybody is not thinking the way that you and I are thinking. In a sense, you have to think, okay, what are they thinking? And but I still think we have to stay within in the principles that we've been given. And that one of the first things begins with is living within our means. I think scripture teaches us that less is more, be positive cash flow. There's not a positive verse in the whole manual about debt, many warnings about it. And much of the economic issues that we have here and abroad now involve debt. So I just think it's a most worthy process and at times challenging, and at times it's getting to the point where even speaking about it openly. I'll tell you this much, Elijah, I know it for a fact. I know I could do more business if I left my faith out of my business. And people would have to guess what I am or if I'm anything to begin with. But it also gets rewards not only for someone like you who appreciates it, but it also every moment when you think it's not worth it, something happens that demonstrates God's hand in your life. And that's what the faith is all about. Some people you can give them all the scientific evidence and they're just going to disagree and not believe. And then there's some people that don't need anything but pure faith to carry on with their life.
Now that we've explored the signs of an impending recession, the Federal Reserve's rate cuts, and the surge in gold and silver prices, let's bring it all together. Here's the bottom line. The U.S. economy is on a precarious path. With job growth slowing, inflation still above target, and the Fed seemingly out of traditional options, the outlook is anything but stable. And while stocks may continue to experience wild swings, those who are serious about protecting their wealth are looking to safe haven assets. Gold and silver aren't just relics of the past, they're strategic assets for the future. As we've seen, silver has broken past key resistance levels and gold is poised to follow suit. These metals have been used for centuries to store value, and in times of economic turmoil, they've outperformed most other investments. But this isn't just about surviving an economic downturn. It's about positioning yourself to thrive when others are caught off guard. Imagine the peace of mind that comes with knowing your wealth is secure, no matter what the economy throws at you. While others scramble to react to the next Fed rate cut or market downturn, you could be sitting comfortably, knowing you've made a smart move to protect your assets. But remember, this isn't a one-size-fits-all solution. It's crucial to do your own research and consider how gold and silver fit into your overall strategy. So, what's your next move? Will you continue to rely on traditional investments and hope for the best? Or will you take proactive steps to secure your financial future with proven safe haven assets? The choice is yours, but the clock is ticking. If you found this information valuable, make sure to subscribe to our channel for more insights like these. And remember, this is not financial advice, just something to think about as you navigate these uncertain times. Thanks for watching, and stay safe out there.